But listen, I want to get right into this because I know that people are curious. And here's the scenario, because we get this all the time. Buyer, they're 65 years old, just retiring. They've been living probably up north more than likely, but they could be anywhere. Sell their house. They've got cash now. They're sitting on about $550,000 cash. They want to move to South Carolina. They come down here and they see what they can get. And they go, but the house I want is $700,000. But I only have $500,000. What do I do? What do I do with $550,000? Because what they want is they want to have a house with no payment, right? And you're here to tell me there's a way they could go up and get that house, keep some of that money, and have no payment. Is that right? And this isn't a scam?
Yeah, that's exactly.
All yours, Paul. All yours, Paul.
So that's it.
Daddy Paul.
Welcome to Real Talk Hilton Head with David and Dale Cross, the real estate lifestyle podcast of Coastal Carolina.
Join us as we share stories from our community, insight into the local lifestyle, and the real scoop on real estate.
From market trends to home design, we dive deep into what it means to live and thrive here.
Discover the state of mind and philosophy of the Lowcountry that enriches life through personal growth, health and wellness, and human connection.
Whether you're a local or thinking of becoming one, we're here to guide you through the ins and outs of living this coastal escape.
Tune in, relax, and enjoy the conversation with Real Talk Hilton Head,
the podcast of Coastal Carolina.
This episode is brought to you by the David Dale team, powered by eXp Realty in Hilton Head.
All right, well, welcome to the show, guys.
Thanks for having us.
Thank you.
We're very, very excited to have you.
It's a big,
Spring has sprung in the Lowcountry.
is it too hot right now for you?
It is. Man, I'm telling you what, it's like heaven on earth
It
Yeah.
is.
on this island. The sun is shining, everyone.
Yes.
And the bright blue skies.
And the
Don't
bright blue
forget
sky
that part.
it is, and the beaches are open. Come to Hilton Head.
Yes.
Amen. Amen. Well, that's it. That's the show right there.
We're finished.
We're done. But listen, I want to get right into this because I know that people are curious. And here's the scenario, because we get this all the time. Buyer, they're 65 years old, just retiring. They've been living probably up north more than likely, but they could be anywhere. Sell their house. They've got cash now. They're sitting on about $550,000 cash. They want to move to South Carolina. They come down here and they see what they can get. And they go, but the house I want is $700,000. But I only have $500,000. What do I do? What do I do with $550,000? Because what they want is they want to have a house with no payment, right? And you're here to tell me there's a way they could go up and get that house, keep some of that money, and have no payment. Is that right? And this isn't a scam?
Yeah, that's exactly.
All yours, Paul. All yours, Paul.
So that's it.
Daddy Paul.
What is it?
Yeah, it is the lifestyle Mutual of Omaha's lifestyle home loan. And the lifestyle home loan is basically designed as a home equity conversion mortgage. And what that does is it allows you to preserve your capital and your cash. And what it does is it defers the payment. People pay cash for a home because they don't want a mortgage payment.
Correct.
And they want to own the home. They want to have the home securely. So there's two reasons to make a cash purchase. I want to secure the home for me and my spouse long term. This is our forever home. And we don't want to carry a mortgage payment into retirement. And so somebody coming from Akron, Ohio,
Which is where
who's
I'm
got 500, that's where you're from?
I'm Cuyahoga Falls,
Cuyahoga
which is
Falls, right
Akron.
around the corner.
Yeah.
You didn't know that?
Good example.
Oh, that is so crazy you picked that. Anyhow, I digress.
So they're coming down from Akron, Ohio with $500,000, and they realize that their house is going to be more than they thought, and they're dreaming of it, and their financial advisors telling them, that's your budget, that's all you can do, you have to preserve your savings, you have to protect the portfolio, because they're not just thinking about the home, they're thinking about maintaining their independence, they're thinking about their retirement strategy, they're thinking about managing their money properly, so they have this $500,000 budget.
Yep.
What we can do with the lifestyle home loan is put them into that $500,000 home. We bring, they might bring, depending on their age, 65, they're going to bring 450, maybe 475. We bring the other 250, 275, and they buy a $700,000 home. And the beauty of this loan is it defers the payments,
Okay.
the repayment of the loan until after the last remaining one of them leaves the home.
So just so I clarify, they're not actually making a payment on
There's
that
no
loan that
required
you're giving them.
payments. They have obligations. They have to pay their taxes, their insurances, their HOAs,
Anything
which
they
they
would have to
would.
pay with
Yeah.
cash.
They have to pay it anyway. So they have those mandatory obligations they have to maintain. And then they're never going to be required to make a monthly mortgage payment. They can make payments if they choose to, but they're completely optional.
Wow.
Right? And there's some financial reasons why they might want to do that. To your question is, all they have to do is live in the home as their primary residence, maintain it, pay their taxes and insurance, and they'll never be required to make a mortgage payment. And then when they're done with the home gets sold or the family decides to refinance it and keep it. But when they're done with it, then the equity in the home repays the loan.
That makes sense.
So
And then
That
if there's
makes sense.
remaining equity,
goes to any
it would
remaining
go to the
equity
estate.
goes to the estate.
Okay, so
Yeah,
they're
the-
only obligated for whatever that loan balance is at that time.
Correct.
Okay.
That is correct. And so that's one of the big misconceptions is that the lender gets the home, after they're done. That's not accurate.
Yeah, we
But-
got some myths we're going to go
Exactly,
into.
Okay,
exactly,
we
yeah.
want to
We'll
talk
cover
about
that
some of the
one.
myths here in a bit.
Absolutely. I mean, I think this is quite fascinating. You've got so many retirees. How come not more retirees are taking advantage of this program, especially with high inflation? The prices of houses these days are so much higher.
Tight cash flow.
Because I know there's
Yeah.
a lot of myths out there. So I wonder why people aren't taking advantage of it.
Well, I would say there's several reasons, but most importantly, it's an education play.
Yeah.
And
Yeah.
when more and more people like yourselves who are doing valuable talk radio or podcasts are getting the information out, it's just educating. This product was developed after the credit crisis of 2008. And
Oh, I
no,
didn't
wait,
realize
that's how new it
Okay.
is.
Yes, it is.
Okay.
I didn't realize that. So
yes.
this hasn't always been around.
No, this has not always been around, but we've taken all the lessons from the earlier generations of this type of product
Okay.
and have fixed any of the weaknesses and the gaps, and it's safe. It's it's an FHA loan.
So it's government backed. So
it's
the
government
FHA 's-
insured.
Oh, government insured.
Yes,
Okay.
it's government insured.
Okay.
And so that secures the home. And there's many details, but to your question, Dale, it's really people are afraid of what they don't understand.
Correct.
That's human nature.
Yeah.
And people are generally familiar with how mortgages work. We've been doing mortgages our whole life,
Yes.
right?
Yeah.
So we have this knowledge about how mortgages are supposed to work, and our commitment that, well, geez, I've got to make a mortgage payment. So we're trained to think,
Yeah.
you get a mortgage up front, and you're able to borrow a lot, and then with each payment, you're paying down the debt. This is in reverse of that. You borrow the money up front, but you're borrowing a small portion of it, right?
Yeah.
But you don't have to make any payments, and your debt is growing.
Okay.
So it's in reverse.
So one of the myths is that does the bank own my house?
Yeah.
Is
You wanna take that?
And no, they do not. It's probably the most, that and the fact that this is a home loan for people who are in financial straits. In other words, a loan of last resort.
Okay.
Those are myths.
So that's a myth.
That's
right?
a-
Actually,
Yeah,
that's
that's a
one of the
myth.
myths we
That
have.
is
This
one
is
of
for
the
somebody
myths.
who's financially tight. And oh my
Yeah.
God, I got to.
No,
Yeah.
no, not at all. In fact, since 2009 is when this
Yes.
when this thing came along. The original HECM came along during Reagan, right? And so there were some things that happened in the early days that tarnished the reputation. All of that's fixed. I like to point people to my own website, right? If you follow you follow my website out,
Yep.
Jim Davidson, you look for Jim Davidson Reverse Mortgages in Bluffton, South Carolina, or Hilton Head Island, you're going to find my website.
We'll put the website on the screen. What is the name of, or what is the address?
It's Mutual Mortgage.
Okay.
Mutual Mortgage, Jim Davidson, Davidson.
Okay,
You'll find
great.
it. You Google, and I'm at the top of the search page. Mutual.
Which is always a good thing.
See, yeah, they see. But if you go to my webpage, down at the bottom right-hand corner, there's a little widget, and if you type your zip code and I always type in 29910, which is Bluffton, right? And then you hit enter, it'll tell you how many of these type loans have been closed in that zip code.
Wow, that's great.
Coming over here, it's 627 in the 29910 zip code.
Wow.
That's a lot.
627.
That's a lot.
And it doesn't include the one we closed this week.
Okay.
Right? And so I like to say this is a loan which I personally, as a 70-year-old, use myself on my own residence, right? This is a home loan for retired people whose time has come, right? We are where we are as a society in this economy with all of the things that you mentioned, Dale, that lend this product with education from folks such as yourself. We believe we're on the verge of seeing this thing explode. I've heard real estate people and mortgage professionals like yourself say, if this loan was available to 40-year-olds, it would be the only mortgage ever written of any kind ever.
You're 100% right.
Absolutely.
100%.
Are you thinking about making a move to the Lowcountry?
Whether you're searching for the perfect home, or you're exploring vibrant communities on the coast, or dreaming of a new lifestyle, we're here to help.
Contact the David Dale team today and let's make your dream a reality.
Yeah.
Especially with where we are with the housing shortage, because that's not going away.
Inventory.
And well, we have more, quote, inventory, right? Inventory's up, but we still have a shortage, right? Even with all this inventory, there's still a shortage, and you just know that appreciation is going to just continue. So it makes sense. Now, my question is, though, on the interest, because right now, one of the benefits we take advantage of, especially as business owners, is we love our mortgage interest deduction.
Sure.
Does it translate on this the same as it would on a traditional?
Only if payments are made.
I was going to say,
okay.
no payments are made. So.
Right, so you can make voluntary payments,
Okay.
and then that interest is deductible,
Okay.
or
Understood.
it passes to the estate
Oh,
later. Yes.
So that's another tax
Or
advantage.
when they
That's right.
sell and pay the balance, all that interest, they're going to get the interest deduction, either them when they sell, or it's going to go, it's going to
To
get
the
passed.
heirs.
Wow.
So that's
Oh, yeah.
interesting.
Is that
what-
amortized, or is that what would it be?
Negative amortization.
Okay, I got it.
Neg am.
Okay.
And so the loan balance, and just to kind of get a picture, a visual of how this actually works, is that we're only lending a small portion of the value, and the value of the house is here.
Yeah.
And so the appreciation of the home is outstripping the growth of the
Loan
and so
balance.
the owner is always going to hold on to the lion's share of the equity. There's still going to be plenty of
And
equity.
that's by design, right, of
By
the
design.
program itself.
Oh, yeah.
Like you're not going to let them get beyond that
Exactly.
threshold, right?
And I
Okay.
think
That's
that's
right.
a big fear that people have.
Well, and I'll
of-
give you my own
of
personal
this.
story. I mean, I took my first reverse mortgage, which extinguished a forward mortgage that I had taken on my home in Rose Hill. So my first one was done to get rid of that mortgage payment, right? I did another one, what we call a HECM to HECM refi, or a reverse mortgage to reverse mortgage refinance, in 2021. Interest rates had stayed low, home values had exploded. It opened a delta of equity that I was able to tap into.
So you're able to draw that cash?
I was able to harvest more equity. My home's 25 years old. I turned around and did a big renovation. I put floors, paint, bathrooms, all this sort of thing by harvesting equity. But it's an interesting twist on this loan product. People say, it's weird, you can't do anything with it. Well, yeah, you can do anything you want to with it. You know, the bank doesn't own the home, you're on the deed. Okay, you can do what you want to. You can pay it off, you can refinance it, or you can do what I did, HECM to HECM refinance, in a situation where the value of the property has increased so much that there's actually additional equity that can be harvested.
That's amazing.
Interesting stuff.
We spend a lot of time educating people on getting their first home equity conversion mortgage. What we're not telling them is they're probably going to have 2 or 3 more.
Yeah.
If they're living in that home, the equity is going to continue to expand. And once you understand leveraging equity, you don't want to let latent illiquid equity sit there. You want to convert it. Because equity doesn't have any value until it's converted.
Yeah.
And so you put it into a line of credit, and then now you have a buffer account, an emergency fund that's growing.
Yeah.
And so, most people will be getting more than one of these in their lifetime.
And in a way, it's funny because it's a sophisticated arbitrage, really.
It is.
Because I mean, it's a brilliant way to because to your point, you're not only getting appreciation, but if you're able to harvest that equity and get a nominal return, like I could put it in my Coinbase account right now and get 4.5%, 5%. So if I'm getting 5% there and I'm only paying 6 or 7% on it, and I'm getting appreciation of 4 or 5%, you're way ahead and you're liquid, and that's the thing because you.
So we need to expand on that.
Okay.
Can we go a
Yes,
level
go
deeper on that?
100%.
Okay, so I'm going to say something that is at first blush counterintuitive.
Okay.
However, it's factually accurate, and it's accurate 100% of the time.
Okay.
Okay. And so home equity is one of these assets that has its own characteristics. And if you don't really understand the nature of equity, it's going to underperform for you. And so here's what people need to know. Equity, home equity, always, in 100% of the cases, has a zero return.
That's
There's
right.
no return on home equity.
That's true.
And people tend to configure the difference between home equity and appreciation.
Yeah.
Your ROI, your return on investment, is on appreciation.
Yep.
Correct.
And equity has no return. So if you have
Because it's just sitting there doing
It's
nothing.
sitting there doing
Nothing.
nothing.
It's
I just wanted
illiquid.
to add that too, because that will
Your
help.
equity is sitting
Yeah.
there, and we love equity. Home
Yeah.
equity is fantastic. However, it has absolutely no practical use until it's converted.
Correct.
And once it's converted, then you can do whatever you want with it. And so home equity, if you've got 500, and the way for somebody who's watching and listening to this should think about it is, if you have $500,000 of equity sitting in your home, you have a $500,000 asset that's returning you zero.
Zero. That's right.
Right? And it can be doing so much more. So my question to anybody that's listening is, what has your home equity done for you lately?
Yeah, I like that.
Right? And if you really explore that, you're going to question the money that's sitting in the walls of your home, and is there a better way? And there is.
I think it's fair because I don't know if you know this, we started our career in mortgages for years.
For
I
years
was
we
in
were
it in
doing
the 90s, and I used to say that to people all the time when they'd come, and especially if they're wanting to put like 50% down. I'd be like, why would you want to put 50% down? Well, I want to get rid of PMI. Okay, well, you can do lender paid PMI, you can do a lot of other things, but what are you going to do if you need that money?
Yeah.
What do you mean? Well, once it's in the house, there's only two ways to get it. You borrow against it, or you sell, right? You have to realize it. So if it's trapped in there, doing nothing for you, right? You're illiquid, it's earning nothing for you. Wouldn't you be better off leveraging it, keeping your money? But what I found would happen is people don't trust themselves with the money,
It's
right?
discipline.
Because
Yeah.
it's what if I spend it? Well, that's on you, okay? Don't spend it. But if you put it to work, you'll find that it will. This is what arbitrage. I mean, this is what banks do with our money.
Yeah.
You think it's sitting in? You think Wells Fargo's got my money sitting in there right now? I don't want you to know where my money's at. But anyways,
Doing
overnight? No.
No.
It's carry trade. They go back overseas, they lend it out, and then they put it back in. And so it's all this arbitrage. And to me, it's just a smarter way of, if I'm sitting on a pile of cash and I want to get my dream home, and I'm over 62 years old, like, come on. I mean, because the only other way to get it out is to sell or borrow it against it.
Or borrow against it, either way.
Well, and then you look at the payment side of the equation. So, I mean, I'm 70 years old. I do this because this is my ministry.
Yeah.
We help a lot of people
I love
that
it.
otherwise would not be able to afford, for one reason or another, to be in the Lowcountry.
Yeah.
This opens
Yep.
doors for people that they didn't know existed.
Yeah.
You go to a Sun City, or you go to a Latitude, or come here to Hilton Head, anywhere where there's new construction going on. You got to wait time to have something built for you. Okay, once you go to application with us, there are ways that we can help you understand what you're going to owe on the closing day, right? But as a retiree, to go into retirement with a mortgage payment, carrying a mortgage payment. Think about that. 65 and you're drawing Social Security, maybe a pension. You've got some savings. What do you want to do? Well, you want to retire and have fun.
Yeah, correct.
Right.
Live the lifestyle.
Live the
Especially
lifestyle.
coming down
Live
here.
life now.
Live life now.
Paul talks about liquidity,
Yes.
which is what the world is all about when you get to our age.
Yeah.
Liquidity is everything, right? This puts you in the house of your dreams, like what we were fortunate. Here I'm holding the Reverse Mortgage National Magazine.
Weren't you featured on that recently?
One of our closings,
Yep.
a couple uses reverse mortgage to purchase a dream home.
Yeah.
Right. This is the story of a couple from Arizona who, over the internet, worked with us to finalize the details and purchase a $563,271 new home in Latitude. They wrote a check for $361,620.
Wow.
563 was the sales price of the home to close it, and they wrote a check for $361,620. That's 64%.
Yep.
Is what they wrote a check for day one. They're in it today, and they'll never make another. They'll never make.
They're living in Latitude, Margaritaville, with no house payment, with 36%
with $201,000
of equity
left in their bank account that they would have otherwise spent for an all cash.
And they still have equity.
Yeah. Oh, absolutely.
And they're not making a payment on that.
That's awesome.
Right.
Yeah.
So it opens a lot of doors for people that they didn't realize existed. It really does.
So what I would say, just to kind of add that, is that when somebody's trying to come into this community to buy, right? Because this is a refinance or a purchase.
Okay.
Right.
But if they're buying the lifestyle home loan, most people know of two ways, right? I can either pay cash or I can go get a conventional loan.
Yeah.
You did them. You know what I'm talking about. And right now, over 45% of 65-year-olds are making a mortgage payment.
Really?
Here's the kicker. You ready? 28% of 82-year-olds are making a mortgage payment.
Wow.
And they don't have to.
Yeah.
They just simply do not know that there's a third way.
Yeah.
They don't know. It's not widely understood that there's another option that can improve their situation dramatically.
Yeah.
And there's much to say about the what happens as people age and as they get into their elder years, but the decisions that you make about your money in your 60s and 70s is absolutely going to determine where you are in your 80s and 90s.
For sure.
At a time when you don't have any chance to recover. The cast has already been dyed. The die has already been cast.
Yeah.
And I got that metaphor
It's all
backwards.
right.
But I think
we
in
call that
reverse.
Dale. I like good
It's
catch.
just what you do.
That's right. It's just what I do. So you want to be mindful that, hey, wait a minute, there's another way here.
Yeah.
And it may possibly be a good fit for you and a smarter way to go.
Well, and I think that we've hit on this before, it's education, right?
is,
People need to understand it, and there are so many myths out there. So a lot of clients that we speak to about it ask about their children. Will the children be left
Will they
with
be
this debt?
saddled?
How will it affect my children? And I know we touched on that a little bit. Can we just retouch on that?
Yeah.
Again, because
Take
that's
them
a
through
big
those steps,
one.
Paul.
Yeah.
That's a big one.
It's a pretty simple approach.
Yeah. First of all, the estate owns the home, and so if the buyers, the borrowers, live in that home forever, they're not stuck there. They can sell it whenever they need to. We're not entitled to the property.
Yeah.
And
They
so-
still own the property.
Right. They
Yeah.
own the property and they can do what they want with it. The estate, it goes to the estate upon the last remaining borrower leaving the home. So now the estate's got to make a decision. They can keep the home or they can sell it. Most people sell it. Down here at the beach, they might want to keep it in the family, right?
Yeah.
Down here at the Lowcountry, they may want to keep it as a retreat for the family. They would just simply refinance it and pay off the balance.
Okay.
All right.
So pay off that reverse mortgage.
Right. You pay off the mortgage, and then they can refinance it with a traditional.
Yeah.
A lot of times, if they're an elderly couple in their 90s, the kids are in their 60s, we could just refinance it with another
back
one.
To them.
Oh,
okay,
that's
so
a
the
great
children
point.
can
Oh my
refinance
gosh,
back.
yeah,
to
because they
them.
might be old enough at that point.
It's 62 years of age, so
Yeah.
you have to be 62 to qualify.
Okay.
So it's designed for retirement.
Are you thinking of selling your home?
With our exclusive Elevate package, we combine over 50 years of experience, cutting-edge data analytics, our unique marketing strategies, and our extensive network to help your home rise above the rest.
while maximizing your sales price and minimizing the time on the market.
So contact the David Dale team today to learn more.
Anything you want to add to that? You good with that?
No, it's important to understand that the house collateralizes the debt by itself, right? And so once the last surviving borrower homeowner leaves the property, there's a process which is defined and easy to follow. Essentially, you call the servicer like you would any other mortgage servicer, the estate, the executor of the estate, or whoever is responsible. And we know who these people are, by the way. During the application process, we are required to take what we call an alternate contact. It can be a child, it can be an attorney, it can be an executor, whoever it is. But the alternate contact goes into the original paperwork and follows the life of the loan for its duration, right? Okay. So if something happens, mail all of a sudden stops getting returned. We don't know. I mean, servicers are in California, the home's on Hilton Head. Okay, now I'm here in Bluffton. Right, so I know my clients. I know when there are health issues or if somebody's looking at moving into assisted living, this kind of thing. Okay, but ultimately the responsibility is notify the servicer when the last surviving homeowner borrower leaves the property for good. Does that mean you go get on a cruise and leave for 4 months? You don't have to do it. Go live your life. Have a good time. You just can't move away and go back to Michigan for 7 months. We don't want that.
And they can't, because they can't rent the property.
That's a good question. That's a good point.
No, this is not about
primary.
Owner-occupied
primary residence.
Got it.
That's right. Buyers coming from other parts of the country looking for property here in the Lowcountry. Last best home, right? Feature it to the max. Right, you got, if you're 65, 70 years old, you're looking at 550, 600,000 in Sun City. Okay, add those fancy lights, add those fancy plumbing fixtures, do the lanai out on the backside, right? Maybe the little swimming pool that somebody in Latitude that they love so much. Okay, these are not inexpensive additions, right? You've got that flexibility with the additional money that we help you bring to the table.
That's great.
It's unbelievable.
And I want to add to your question a little bit, and that is, are we being responsible, with the legacy we want to leave the family, right?
Because that's a big concern for clients.
And so what I would simply say is that, and there's been thousands of Monte Carlo studies done on this, and when you're looking at passing legacy and assets to the heirs, it's not just the house, it's the portfolio, it's the personal possessions, it's all the things that you're passing as a legacy from your wisdom and your experiences together. And have you been able to stay engaged with each other as the family together, and do you have those memories? And the house. Right? The house is a piece of it. And what I would say to you is, if you've got $500,000, let's say you're coming to this area, I'll give you an example. If you're coming to this area with $600,000 to buy a home, and you find a house for $600,000 that you fall in love with, you could pay cash for that, or you could put $375,000 or $400,000 into it, hold on to $200,000. So what's the potential of that $200,000? And so what the financial scientists have done with their Monte Carlo studies is that actually you have like a 93% chance of passing more assets to your heirs the earlier you get into this loan. Because you're preserving the other assets, and the other assets can grow. So you're passing more assets the earlier you get into this.
Wow, that's
so
really interesting.
and there's a lot more to be said about that particular comment, but I just wanted you to know that you can take care of yourself. You can take care of each other and still have plenty of assets to pass to your heirs. What the biggest fear that boomers have, the biggest fear that they have is running out of money. Right? That's the big fear.
Absolutely.
It's the number one fear far and away. And what's underneath that is not that so much that they're going to run out of money, is that they're going to lose their independence or become a burden on their children.
That's right.
Right, that's the fear.
Yep.
Right, and that's the opposite of lifestyle. That's the opposite of choice and living life to the maximum. And when you preserve your assets, when you make sure that you're liquid, make sure that you're making good decisions that are long term, you're going to be able to live the lifestyle and maintain your independence, and also have your family enjoy. Like, do you want to pass your assets with the warm hand or the cold hand?
Right.
Right? How do you want to pass your, and a lot of people want to pass their assets with lifestyle, living together, enjoying the time. And if they
you
can,
finally can, right?
Right.
You're retired, you can finally stop
the whole point.
and do it. That's why you move here.
So here's what's interesting about retirement housing when you're buying your forever home, or most people would assume that you're downsizing in retirement. That's not accurate, right? 51% of people buying their retirement home life after work, they're actually buying a smaller house, right? 39% are going bigger.
Wow.
And 19% are buying about the same size house because they want the family to come in. And so if this allows you to come into town with $700,000 and you can buy $1 million, guess what you just did? You expanded your lifestyle. You moved closer to the water, right? You're 2 rows closer to the water.
It's so true. I can think of clients off the top of my head that have come here and bought the bigger house so that when the children and the grandchildren come, they can share that life together.
Indeed.
Those memories.
It's such,
I think, though, you know, like, because right now, if I said the name, you would know who I'm talking about, who needs this loan.
Yeah, probably.
Right? and it would be perfect. But I think you said fear, you know, because there's an acronym, right? We know this acronym. It's false evidence appearing real.
Ooh,
Fear.
And I feel like that's the key
FUD.
here for people is this is just a tool in the toolbox that it's functionally the same as a mortgage you've always been comfortable with your whole
Really
life.
is.
Indeed.
Or, you know what I
really
mean? It's essentially, it's just how they operate is the only difference, you know? And I feel like who's ever watching this, that if they could just get over and really dive into this could unlock something and help them. Because what good does it to live in fear at that, you know?
No,
I mean,
no.
Yeah.
That's the opposite.
It's the opposite of
So
lifestyle, to your
there's
point.
a few things I'd like to say about that. So since you put that on the table, first of all, Mutual of Omaha is an iconic brand, 117 years. We're the #1 HECM for purchase lender in the country, right? And number 2, this design of this loan came out of the 80s when the pension system collapsed during the 80s.
Yeah.
And the demographers at that time were looking at the first quarter of the next century going, we're going to have this massive age wave retiring, hitting the shores of life after work. And, you know, there needs to be, this was pioneered in New Zealand and Canada. It's very common in Europe.
Oh, really?
We just didn't have one here. So this is common.
Everywhere else.
We just didn't have one. And so the Reagan administration, at the end of the Reagan administration, he said, you know, we need to study this and we need to develop this product for our country. So it's designed, by design, for life and retirement. And what is so interesting to me when I sit down at a kitchen table, we're so familiar with leverage. You know, we use leverage to buy our first house. You know, we put down 3.5%, we get an FHA loan, you know, and oh my goodness, we got a payment, and how can we ever afford this house? Do y'all remember when you bought your first house?
Yeah, I do.
You buy your first house and it's transformative, and you learn firsthand leverage. You understand, I can control a $250,000 home for like $10,000,
That's right.
right? Like that's leverage. And then we do it again. We get a HELOC, and we got to put the kids through school, and so we leverage some of that equity that's sitting there. You know,
It's so true.
and so we all, you know, we use leverage. We start a business. We use leverage for 40 years, and then all of a sudden we forget all about it at 65.
When you got the biggest pot under your feet you've ever had.
Exactly, at that point.
It's total misunderstanding. I'm so thrilled that we're doing this episode.
I agree, because I think people, we are so ingrained to pay off your debt. don't have debt, especially as you
Yes.
get older. You don't need to have a payment. Pay off your debt.
Yes.
Leave something for your children. This does all of that.
It absolutely
really does all of that and more. That's just a
The only people that it's the opposite is the wealthiest people in the world have so much debt. It's not even
they
funny.
leverage in.
Because they get it.
They get leverage.
I mean, Ken McElroy is one of my favorite guys I listen to, and he talks. He's like, I'm $775 million in debt, and I don't care, because when you look at what he's used it to acquire.
Yeah.
I mean, thousands and thousands of units that he owns. That's
course.
bringing in tens of millions of cash flow every month, and it's leverage. But he doesn't care. He's like, because it's allowed him, to your point, acquire and build the lifestyle he wanted. Yeah.
So that sounds great. The product sounds great, but let's talk about the process. What does that look like? What's the eligibility like? What's the actual process from start to finish for somebody?
You want to go?
Good. And it needs to be understood because it's different.
Yeah.
Right. I'm local. That's a big plus.
Mr. Jim
Right.
Davidson's local.
That's a big plus.
It is,
As a
very.
consumer of this product, believe me, dealing with someone local makes or breaks the experience.
Because you come and actually sit with somebody at their table.
I'm in
right?
and out of the.
Yeah.
We become family and friends.
Yeah.
It just goes with the territory,
Okay.
right? One of my most dear clients over here in Port Royal Plantation. I point this way for all of you guys because Port Royal's
that way.
Sure is.
Look at it on the map. Port Royal. I grew up there.
Yeah, the camera's right there.
Okay.
Yeah, that's yours.
She's 84 years old,
Yeah.
right? And so you think, does she know where her Social Security award letter for 2024 is?
Yeah.
Maybe, probably not. It came in the mail and she threw it away, right? Do you know how to help them go out to Social Security's website and print off a PDF copy of it?
Yeah.
Right? There's a lot, but the process is this. In fact, I've got a one-sheet summary page that I'll email to anybody who's interested.
Actually, yeah. So, Asher, put it on here. If you are interested in this, we'll put a link in the description of our YouTube video that you'll be able to download it from Google Drive and be able to get a hold of Jim.
It's the step-by-step process from where we are today at Real Talk, the podcast, to the day we close, which the way we close most of them, when we get to the end of the process, is a notary or an attorney. South Carolina is an attorney state,
Yep.
right? Comes to your home, right? Somebody comes to your home. We sit down at your kitchen table or wherever, okay, and the documents are placed before you, and the signing happens there in your home. Not uncommon. Most of them happen that way. Don't have to. We use DocuSign as well. For those of you that are techno-literate, okay, we got you covered. Step number one, and this is something that has to be understood. When someone's interested, first of all, in understanding what the loan's going to be worth to them in their situation, they got $500 in their pocket. They want to know at their age what they can buy. We're solving for how much cash do they have to bring to the closing table to close this thing.
Okay.
If 500 is what they've got and they want to retain some of that, then we need to know what that number is so that they know of that 500, I'm going to be able to keep 150.
Yeah.
I'm going to spend $350 to buy my 500 house,
Yeah.
right? But I'm going to have 150 at the end of this left over to leave with my financial advisor. So we need to solve for the amount based on how they're going to use it, number one. Once that's done, then I hand them, this is all in my information from Mutual of Omaha, I hand them several sheets of paper, and step number two is for them to go to a HUD counselor. What is that? A HUD counselor, a licensed professional. This is a step that's required by law, right? Second step after meeting with me and deciding to move forward, right? I've got to have, they go through a HUD counseling session, which is essentially about a 45-minute to 1 hour phone call around a speakerphone so that the counselor, again, a trained professional, can take you through what you're signing up for.
Okay. Educate them.
Educate them,
Yep.
determine, number one, in our age group, it's sad to say, but it's true, we've got to make sure we're dealing with someone who's cognitively
Yeah, the capacity.
Yeah. Sound.
capable of making that
Yeah,
decision for
cognitive.
themselves.
Mm-hmm.
Children come in and sit in on those counseling calls,
Yeah.
Okay.
right? It runs far and wide, but counseling is step number 2. Out of counseling comes a 1-sheet counseling certificate, a HUD certificate, and it's got a little number up at the top. It's about a 7 or 8-digit number up in the top. That number is assigned by FHA HUD. Okay. Once they receive that counseling certificate, they sign it, scan it, send it to me, and I'm able to put that number and a copy of that certificate in my software, right? My software cross-foots their completion of counseling with my proposal documentation. HUD now knows, yes, this client has been counseled, you're free to proceed with your application.
Gotcha.
Okay.
Right?
Gotcha.
Off goes the application. Again, you can do it manually. There's a lot of signatures required, right? You can do it manually.
Is there a credit requirement, like a traditional? Like, do you have to have a certain credit score?
There is, David. There
Okay.
is. There's a what we run. The system runs what's called a financial analysis.
Okay.
Okay.
We take some income information. If you've got Social Security, do you have a pension? Personally, as an originator, I try to keep it to the minimum.
Okay.
Right.
Because there's minimum income.
That's right. We're not qualifying you to make a mortgage payment.
Okay.
All we're
So
trying
there's
to
no debt to income ratio or anything like that?
it works completely different. People
Okay.
say, I've got some issues in my credit report, right? Or I've got a late payment over here. So these sort of things, those are flushed out during the process, right?
Okay.
That first meeting.
That's right. With
Okay.
letters of explanation, we take care of those things. I would say this: if you're not an axe murderer or you're not a felon coming from Illinois, right? Then you're going to qualify for one of these
Not
things.
that we're picking on Illinois folks here, because they could be from Buffalo. Just kidding. Just kidding. I just want to be equitable here. I'm just kidding.
You know how we tell people from Ohio apart.
Yes.
Ohio.
What color minivan they drive?
But the bar of entry is lower because we're not having to prove out
The ability to repay.
the ability to repay the mortgage. And we don't strictly use credit scoring. Credit scoring is not used in this model.
Okay.
These are manually underwritten, so we have a live underwriter.
Yeah.
So it's not automated underwriting. It's
Hence
manual.
why the letters of explanation and you have
Right.
a person reasoning with you. Basically.
Exactly. And the good news is we can contact the underwriter and talk to the underwriter because they want to know the story.
That's right.
So if it makes sense, what is big in qualifying is, do they have a capacity and a willingness to repay their debts?
Yeah.
Do they have, it's not the score. We don't look at the score strictly. We look at their pay history, especially around the taxes and insurance. If they've paid their taxes and insurance on time over the last couple of years, they're going to qualify.
That's incredibly important, right? Because
Yes.
they can come and get that house,
Exactly.
and which is the asset.
We
you're
want these
leveraging.
loans to be sustainable,
Yeah.
right?
So could I park us there for a question, just
Yeah.
deviate it? What happens if someone does default on their taxes or?
Well, I mean, if they're in a HECM for purchase, if they're in our lifestyle home loan, and they don't make their tax payment, or there's a couple different remedies that we service our own loans. It's
Oh, you do?
another really
Okay.
important thing is that we service these loans. They're going to be getting a monthly statement from us. If we get a notice from the insurance company that they haven't made their payment, we're on the phone to them.
Right now.
Okay.
What's happening?
Okay.
Right? If they're not responding, then we go, okay, something's going on in this household.
Yeah.
We're going to send somebody out.
Okay.
All right? We're going to contact the alternate contact person.
Got
We're
it.
going to
Right.
find out what's going on inside that home.
Yeah.
If for some reason, they've taken a loss of income, maybe one of the spouses have died, they're not able to make ends meet like they thought, we may go ahead and grab some of that equity and set it aside and pay the taxes and insurance to keep them in there.
Got it.
So there's various different
there's-
remedies.
There's safety nets.
And that's
Right.
baked, that's baked into the
Yeah.
terms of the loan. that I'm assuming, right?
However, not paying your taxes and insurance is a default.
Yes.
and we have the right to
Just like it is with a with a free and clear home.
Same thing.
It
Yeah.
can trigger
Same
it.
thing.
If we can't
Absolutely.
fix it, it can trigger it.
So you try to fix that issue first
Oh,
before
yeah.
taking the home to the
Absolutely.
homeowner. Okay.
Yeah, we're communicating with our borrowers all the time.
Good.
Okay.
Yeah, yeah.
That's good.
So sorry. So back to
So
the original.
the
qualification.
application process really is what you would expect in any mortgage application. We're collecting documentation.
Yeah.
Ayla Blankenship, if I may call her name, is my client coordinator, and she is everything. She's precious. She's on the phone to my borrowers. She's calling this, basically she's also a contact. And so she's helping keep everything together, organized, and once it gets submitted right to underwriting, then it's just a wait. We see how, see what the decision comes back from underwriting. Loan gets approved, they schedule a closing, and we close.
Okay.
If there is funds to be taken by the homeowner, if they're doing a refi, then 3 days after closing, which is right of rescission according to federal law, 3 days after closing, those funds change. Would be transferred to the homeowner's bank account. In a purchase setting, everybody's cleared and paid right there in the spot. Okay, and so the purchase transaction happens quicker. But
Yeah, so just adding on to what Jim was saying about the process.
Yes.
Let's go with a purchase, right?
Okay.
If you're a realtor out there, how does this process work? You're going to need a pre-approval. So what we do is we work with the buyer, right?
Okay.
We get them pre-approved, and that we get them pre-approved, which is a much higher level. It's actually a loan commitment.
Okay.
Takes a few days to do because we're documenting. So we're pulling credit, we're documenting the loan, we're making sure that the assets are there. So we're verifying so that we're giving to the realtor to go make their offer a loan commitment.
An
Yeah,
actual
which is way
commitment.
different than a
Yes.
pre-approval. Yeah,
So
for sure.
we want to do that work up front, takes a few days. We get the loan commitment, they're all pre-approved. We got a loan commitment for the offer. It's going to really underpin that offer, especially if they're going up against a cash purchase. They have to know. And we are closing within 30 days.
That's a good
30
question.
days.
So
it's
30
just-
days is.
Yeah.
Okay.
And the counsel, and during that period of time, they're getting their counseling done, and we're doing the application. So we stay ahead of it. And from contract
Yeah.
to closing, give us 30 days, and we'll bring you home.
So how am I positioning that as the agent if I'm up against a cash buyer? Because technically my buyer could pay cash.
Yeah.
sure,
Right.
So how am I positioning that then? Like,
Well,
difference.
Yeah,
No,
right. I mean, it's just as good as a cash buy. What you're doing is you're normalizing and you're leveling up to a cash purchase with the loan commitment,
I got you.
right? They just, in the seller's mind, the reason they like a cash purchase is that there's no lending complications
Yeah.
involved.
No
Right,
contingency
And
period
that,
for that.
Yeah.
and that the seller understands that this is going to happen.
Yeah.
Yeah.
And the realtor, the selling agent, is selling that idea.
Yeah.
And they're amplifying it. And so what they have to counterman, the way you would counterman that amplification or leveling it up to a cash purchase is saying, this is not a pre-qualification. This is a loan commitment.
Yeah.
This loan is documented.
Yeah.
We're ready to go.
All the,
We can close within 30
all the
days.
eligibility requirements have been checked
Correct.
already.
Right, and we're short of the appraisal, right? The appraisal's got to come in at the purchase price, otherwise there can be some
yeah,
negotiation done.
Yeah, because that changes their numbers.
Exactly.
yep.
Sorry, real quick. So just to kind of summarize it, because I
Yes.
know we've talked a lot. Have to be 62 years old
Or
and
older,
older.
yep, yep.
Okay. You have to. You're looking at the payment history versus an actual credit history.
Credit score.
Credit score. That's what I mean. Sorry, payment history. What was the other thing we talked?
Got to live in the home as your primary
Live in
residence.
your home as your primary.
Yeah, no
okay.
second homes. This is
Yeah.
a primary residence, right? You got to pay your own taxes and your
Taxes and
own homeowner's
insurance.
insurance. And living in our communities here where most everybody pays a HOA or a POA, you got to pay that.
What about home types?
Yeah. Is there
Can
a
you do
requirement for
condos
that?
or a single
Good
family?
question,
Can
Paul.
you?
Yeah.
One to 4 units.
1 to 4 units.
1 to 4 units. Somebody could buy a duplex, live in half of it, and rent the other half out.
Are you kidding me?
Hello.
So you
Somebody
should-
could buy a triplex, live in one of them, and rent the other 2
Guess
out.
what I'm doing? Like,
are you
I'm not
doing?
ready
You're
to
not
get there
old
yet.
enough yet.
But
No.
listen, that's my strategy. Like,
Yeah.
you just gave, that's it.
Oh, my
baby.
Lord.
And
We're gonna
Well,
do
if you
that.
think about that rental income, that's brilliant.
Heck
that
yeah.
rental income,
Oh my gosh.
like you said earlier, you could make additional payments on the mortgage, which I never knew. That's fabulous.
There's a whole
lot of
nother
rent payment.
podcast
Yeah.
about that.
Yeah, I was gonna
Yeah.
say, well, this is part 1. We're
Yeah.
gonna have you guys back, part 2. Okay.
Yep. So yeah, and so as long as you're in the home,
Wow.
as long as one of the borrowers, if there's 2,
Yeah.
as long as one of the borrowers are in the home, then and they pay their taxes and insurance, maintain the home.
So that
and,
leads
you know,
me to
you never
another
have to make a payment.
really good question. So as long as one borrower is in home, so say they were to one passes or they get a divorce. Let's talk about a divorce situation.
Yeah.
And a lot of
'Cause that
times you have to
happens.
refinance out of a mortgage. So explain how they would need to do that if they need to get one of the spouses.
Well, it's
off.
so interesting that you bring that up. Silver divorce is a thing, right? And we're dealing with that culturally here in the country. And you can use, a lot of times in a divorce, if it's amicable and they're talking civilly to each other, you know, they want the best for each other.
Yeah.
A lot of times they're just not, they're done,
Yeah.
right? And they're moving on and they want the best for each other. Well, one of them wants to stay in the home. Well, you can use the HECM. You can pull the cash out of the. So let's say they own a $600,000 home, and the ex-husband wants to leave the home, but needs cash to leave.
And wants his
We-
share of the equity.
Right.
Yeah.
And he can pull out a couple $100,000 and walk away and quit claim the deed over to
Okay.
the spouse, and she has the HECM on the home. She doesn't have a payment.
So it would be
He's
a
got his
HECM
money.
refi.
It's a HECM refi.
Not
It's
a
a
regular
HECM
Would they
refi.
both refi it?
Well, he could take his $200,000 and go buy a $350,000.
So he's not going to be on the HECM,
Yeah.
is what I'm getting at.
No, he could
Yeah.
go
Not
do
on the
his
original.
own
Okay.
when he goes to buy.
Yeah.
Yeah, he'll quit.
So it would be a
he'll quit.
refinance for her.
Oh, I got it.
And
Then
And
he
then he
can
can
do a
use it
purchase.
and go do a purchase.
Sit,
it's a
takes his money,
refi.
go do his.
I cannot believe that this isn't a larger. Because am I correct?
There's
Like,
more.
there's like you said something about we're at a point where there's
Let's talk about the peak
the
65.
like there's
Yep.
more
Yep.
65-year-olds.
Well, here, yeah, we're in a historic moment, all right? We're in an
2024.
evolutionary moment in human history in
Yeah.
that there's more, two-thirds of every single human being who's ever lived to age 65 is alive on the planet today.
Wow.
All right,
Yeah.
I'm just telling you, we're in a whole new, and then with the high sciences of bionics and neuro-nanotechnologies and machine learning, longevity is another disruptor.
Oh,
Yeah.
Right?
We're biohackers. That's
Yes,
what we do.
yes,
Yeah.
yes. So
Yeah,
now,
that's exactly right.
So now what we're doing is the baby boomers will normalize age 100, no doubt about
I
it.
agree
Wow.
with you.
Okay, and then the next generation coming along, much more than that, right? So we're evolving, and the baby boomers really are going to represent a transformation of how we think about life after work. That whole thing about the second chapter, the third chapter, people are going to be living actively
Yeah.
in life after work. They're going to start businesses. They're going to write books. They're going to do their
Yep.
paintings. They're going to, you know.
Well, this
they're-
is what we're
they're
talking
gonna
about
stay-
with the Lowcountry. Exactly what
Well,
you're
that's
saying.
you, literally
is what,
like you need to be
Yeah.
an ongoing guest because that is what we mean
But that's
by
what we're talking
the
about.
lifestyle. Because you're coming here to refire, not retire. You're coming here to
Yes.
get ignited for what's possible. Because
Yes.
I believe that we could see where you're going to live longer in this phase than your actual working years.
It's very possible, or as long. It
Yes.
can
Or
be
as
a
long.
long phase if you
Yeah.
take care of your health. And
Yeah.
what I would say is that to succeed, there's three things that people who are really trying to get their mind around, how do I plan for longevity?
Yes.
There are three things you must secure. You have to secure sufficient and sustainable income
Yeah.
for living. You have to deal with and have a strategy and a plan for care for aging. And you have to have housing forever.
Yeah.
And if you're missing one of those, it will undermine the other two.
Yeah, that's right.
You have to secure all three. And so you have to manage your assets, you have to get the most out of those. And what this loan will allow you to do is create another stream of liquidity. And so I would add to what I just said with this, and I want every listener to really think about what this means. To succeed, success in a long, extended, fulfilling, happy, excited, active retirement is going to be directly proportional to how many streams of net spendable cash flow you can control.
It's very true.
If you sit down with a financial advisor, they're looking for other streams of cash flow.
Yeah.
Where's the income going to come from? And we're talking about net spendable streams.
Yeah.
You can pull money out of a HECM tax-free. All right, and so it's
That's
another
huge.
it's
Thank you.
another
This is huge.
liquidity. It's another bucket of liquidity that people get, which is going to just add to the lifestyle. And what I would say to you, in my experience of 48 years in the business, I have sat down at 4,000 kitchen tables.
Wow.
That's amazing.
And when you sit down at 4,000 kitchen tables, you learn at a visceral level what people aspire to and what they strive for and what they dream about. And it's possible. It is possible. You just have to plan for it. And what I would say is that the single, especially in retirement, the single most impactful quality of life decision a person makes is the home they choose to live in.
Yeah.
It affects every day of their life, where they come and go, and the sanctuary. And what I would say is that go for the dream home, go for it.
Yeah.
You can step into it, you can have that dream, and you can leverage, you can use the concept of leverage to extend that dream and
Yeah.
to go for it.
Yeah.
You know, have you ever gone into a restaurant and read the menu from right to left? You know, it's like
No, actually, I have not.
$38, $26, $21. Yeah, I'll have the macaroni and cheese, right? It's like, that's the way people buy.
Yeah.
It's like they show up to the realtor and they go, we have this much money,
Yeah.
show me what I'm gonna buy,
Right.
Gotcha.
right? And
Yeah.
what we're saying is, wait a minute, you can actually read the menu from left to right. Let's talk about what's possible, and then let's go find the home that fits within that possibility.
Yeah.
So
I love
I really
it.
love that.
I love it.
extends
Reverse thinking right there.
Yep.
That's exactly right. It's kind of inside out
Yes,
thinking, right?
Absolutely. Absolutely.
Wow, that's good.
That's
so
good,
now
some good stuff.
you had touched base on something prior about somebody's already in their house right now.
Yes.
And you're saying that they can benefit from this too, or something?
Yes, yes,
So let's touch on that.
yes. Thank you for asking, because this is really vital. There's a lot of people that will be watching this that are already in their home,
Yeah.
right? I just finished a loan with somebody who did everything right in life, right? They worked hard, they saved, they got a pension, they did everything right. They built their home, their forever home, $1.2 million home, paid for. Did everything right to get themselves ready, and then life reaches out and throws you a curveball, right? And the curveball for them was his mom and dad had to come and live with them.
Okay.
Advanced dementia, and the husband and wife are now primary caregivers.
Wow.
And they're looking at their mom and dad and they're going, we don't have a long-term care strategy.
Yeah.
It was a blind spot. It was a miss. And they went to their financial advisor and said, can you talk to us about long-term care insurance?
Yeah.
And the long-term care policies that it was going to cost them was going to take almost 3/4 of their entire nest egg to buy those life policies.
Wow.
Wow.
Those long-term care policies. And so he said, you need to go talk to Paul. And so that's how I got him.
Okay.
And what they were concerned about was a long-term care strategy. They were saving money. They were not spending above their means. They had plenty of income. They had no long-term care strategy. And long-term care is getting more and more expensive
It is.
by
It's
the
extreme.
year. It's a problem.
Yes.
And we could talk about Peak 65 and how that's going to affect
I would love
long-term
to.
care.
Yeah.
You've got to take control of your long-term care strategy. And so what we did is this $1.2 million house was paid for. We put a $375,000 line of credit that's growing. So the line of credit, so if you've got equity and you don't need the money, just set up the line of credit.
And
Right.
use it as you need
And
it.
here's the principle. You set up your lines of credit when you don't need them, so they are in place when you eventually will.
Yeah.
And that's what this does. And he was, like, he's a competitive tennis player. She runs half marathons. They're going to live forever,
Yeah.
right? So he wanted to look at what will this line of credit grow to when we're 83 and then 90. He was concerned about their elder years.
Yeah. Yeah.
And so we showed it to him. We projected the growth of the line of credit, and by the time they were 83, it was going to be $1.2 million. And by the time they got to 90, it was going to be $2 million.
Wow.
And he looked at her and he goes, there's our long-term care strategy right there,
Yep.
right? So the equity in the home can be a part of that solution.
How does the equity grow? The equity line grow?
The line of credit has an internal rate of growth, and it's tied to the interest rate.
Okay.
So if the interest rate's 7, your line of credit's growing at 7.5. If the interest rates go up to 9, the line of credit's growing at 9.5.
Gotcha.
If the interest rate comes down to 5, then your line of credit's growing at 5.5. So it's being driven by what the interest rates do.
Okay.
All right?
Wow.
And the line of credit's just growing. So that's a great solution. Also, if there's somebody in listening to this and they're making a mortgage payment, and if you have 60% equity, 70% equity in your home, and you want to get rid of that mortgage payment, you can do it. You can do it right now and free up that cash flow. And you know what that's going to do? There are people who are calling their financial planner and they're drawing money out of their qualified plan to be
Paying
able
taxes on it.
paying taxes on it to make their mortgage
To make a
payment.
mortgage payment.
You can cut all that out and just be liquid.
Wow.
You know, it just sounds like to me like so many people right now have a retirement strategy that is really stuck in the past. And this kind of is it's a reverse, but it's forward thinking.
It's a
actually.
new tool.
It's a
the
tool.
third way, right?
It is a third way, and,
The
you know
third
it's
way.
hard for all of us though, and I get it because you're ingrained for so long to think a certain way. So this is counterintuitive. It's scary, and I think that's the thing. Is for a lot of people, it's the fear of like what if I fall? Like what if? But it sounds to me like that's already been well thought out.
I got 627 folks that'll tell you it's fine.
That's great.
Including me.
And that's just in one zip code.
It's in one zip code.
And so what I would say to your viewers and your listeners is that, make a good decision, get yourself educated.
Yeah.
And what I will promise them is that the closer they look, the better this will appear.
Yeah.
There's no boogeymen in the closet. There's no gotchas. This is by design, designed for retirement.
Yeah.
And those people who've gotten to that point in life can take advantage of it. It's there for them. It's a resource for them. They just need to get educated and call somebody they can trust to talk them through it.
Yeah, it sounds like you two are perfect for that.
Yeah.
So.
Well, thank you guys.
Yeah, no, thank you. This has been an incredible episode. This actually, I say it all the time. It's always my favorite episode, right? I don't know. But this is one of my favorites only because, like, we specialize in the active adult community. You know that, like, and I never thought about these things myself. In my 40s, working with people who are retired, like, it just wasn't on my radar. But it's been hundreds, almost thousands of people we've talked to since we've been here, and I just feel like, oh my gosh, like I want to scream to them all, like, there's another way, and they've got to look at it. So thank you so much.
Yeah, we appreciate you.
Yeah, no, and what we'll do is, to anybody who's watching, we're going to put Jim's contact information as well. And he's local here in the Hilton Head area. Obviously, we'd love to talk to you about it as well, but get on the path of education.
Yes.
If nothing else,
Quickly, and don't waste time.
yeah, it doesn't hurt,
Don't waste
and you
time.
don't have to go anywhere. And these are educators; they're not salesmen. They're here to help you come up with a better way. And I just think it's fantastic. So thank you.
Thank you both.
Thank you so
Appreciate it.
much.
It's a real
Appreciate you coming.
privilege.
We appreciate
Awesome.
that.
We'll see you
Great
soon.
And all the
information.
luck with Real Talk.
Thank you.
Thank you. Yeah, we're excited. Yeah, we'll see. But thank you.
Hair and makeup for this episode brought to you by Salon Celeste, where style meets sophistication. Let Victoria Gomez create a confident, radiant look with an expert cut, stunning color, or the perfect blowout. Book your appointment today.
What an incredible conversation that we had today. And I think we just opened a lot of eyes to something that most people didn't even know existed. So big thanks to Jim Davidson and Paul Donahue for sharing your expertise today. This is exactly why we love doing the show, because knowledge is power and the right knowledge can change everything. Right, Dale?
Exactly. If you've ever thought of making a move, downsizing, or just finding a smarter way to buy your next home, this strategy may be exactly what you need. We specialize in helping people find the best real estate solutions that fit their lifestyle. And this is one of the tools we use to make that happen.
So if you're curious about how this could work for you, just reach out to us at info@daviddale.com or call us at 843-533-8125. Every situation is different, and we can walk you through what's possible based on your goals.
Thanks for tuning into Real Talk Hilton Head. Please like, subscribe, and let us know what resonated with you today.
We'll see you next time.
Don't forget to follow, like, share, and subscribe to Real Talk Hilton Head and leave us a review to help others discover the Lowcountry lifestyle.